Compared to the stock market, using leverage is more straightforward, allowing you to obtain the total value of the property with just the down payment as investment capital. Additionally, cash flow from real estate is often more significant than the S&P 500's dividend yield. Moreover, unlike stock market investments, real estate purchases can be written off as a tax deduction to help you pay less in taxes. Therefore, the question is whether the benefits outweigh the extra work involved in financing and owning real estate. Can you genuinely make more money in real estate, in addition to the fact that it is different and perhaps more emotionally rewarding? Let's find out in this video. First, make sure you hit the like, share, and subscribe. Then click on the notification bell for updates on our latest videos with fresh new topics. Real estate investments. Real estate investing entails purchasing actual land or property. Some real estate, like a vacant piece of land that you maintain and pay taxes on while you wait to sell it to a developer, costs you money each month that you retain it. Every month, rent from real estate can produce a consistent, dependable revenue flow. Certain real estate types, such as apartment buildings, rental homes, storage sheds, or strip malls, can generate income by charging tenants rent, and you keep the difference as profit. If the real estate is vacant, you could lose money each month. Taxes, upkeep, utilities, insurance, and other expenses must still be paid. You can start losing money each month if circumstances beyond your control result in a higher than normal vacancy rate. Real estate requires a lot more labor than equities do. You must manage late-night phone calls about gas leaks, bathroom water leaks, the potential for lawsuits due to faulty porch planks, and more. The management of your real estate investments will still require a few meetings and oversight, even if you engage a property manager to look after them. Liquidity in investing refers to the simplicity with which you can withdraw cash from your investment. It can take at least a month to sell real estate you own for cash if you need to. Before finding a buyer, you could have to list real estate for a few days, weeks, months, or even years in some situations. Your property enters into an escrow when you find a buyer for at least 30 days. During this time, inspections, title searches, document signings, and bank fund transfers must be completed before the property is transferred and you receive your money. When you invest in real estate, you will most likely only have a few properties if you have limitless finances. Because of this, diversification is more complex, but it is still possible in the real estate market, provided you are selective about the areas and kinds of properties you choose to acquire. Real estate requires a much larger initial investment and additional expenses for upkeep and upgrading. More people may pool their funds to buy real estate because of the rise in popularity of real estate investment trusts, REIT. Warren Buffett's take. Warren Buffett has experience making early money in real estate over the years. But according to him, real estate is not a commodity and tends to be more accurately priced, mainly developed real estate. Now, during the RTC period, when you had massive amounts of transactions, you had an owner that did not want to be an owner in an earnest way. He would not even have a good idea of what he owned. Hence, there was a lot of mispricing. People would make a lot of money off it. Under most conditions, it is hard to find mispriced real estate. When you look at current transactions that REITs engage in, you get a lot of information on such things. They are very similar, but it is a competitive world and everyone knows what a Class A office building in a big city like Chicago will produce. Except for some unusual and unpredictable events, it's a lost cause to argue with conventional knowledge at most times in the real estate world. Occasionally, there could be ample opportunities in the field, but it is usually more chaos in real estate. You must have the money shut off to quite some extent to get any significant mispricing across the board. Buffett agreed with Charlie Munger when he stated that by its nature, real estate tends to be a very lousy investment for people who are taxed under Subchapter C of the Code relating to corporations. Yes, there are some C Corps in real estate, but other more attractive structures exist. Other structures work well for big insurance companies in determining the returns on capital in the discount score field. But if you're dealing with S Corps, the equivalent of S Corps, REITs, partnerships, or individuals, you have an economic disadvantage. To sum it up, the benefits and drawbacks of real estate are numerous. It requires a lot of effort, which is the first major drawback for most people. You must negotiate and purchase the property and then manage it, even if you have a management firm. You must read books to learn how to invest. You must examine hundreds of properties to locate a winner, often reviewing as many as 300 homes before buying one. Then get tenants, keep it occupied, fix things that break, etc. Because you're making an effort to find a decent property in a good location, to find good renters, to manage well, etc., you can have a more significant impact on your results.